Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to quickly go over the CEO of Brookfield Corporation, Bruce Flatt letter to shareholders, and also the latest press release of Brookfield Corporation, which includes the recent earnings and financial results for the year 2022, which also released this morning. Brookfield is one of the core holdings in my stock portfolio, and I currently have 8% of our stocks portfolio invested in this company. I analyze Brookfield Corporation stock and also their spin-off of asset management business in detail in separate videos on the channel, and I will leave the link to those videos in the description box below. Brookfield Corporation is focused on finding undervalued assets and businesses, deploying capital on a value basis, and compounding the value over long term. And their business has three core pillars of asset management, insurance solutions, and its operating businesses. Brookfield Corporation reported their annual results for 2022 this morning, and I have to say I'm impressed with the numbers in this report. So in this video, I will break down their Bruce Flatt letter to shareholders and then their annual report, and share with you my take on these numbers. Okay, let's do this. Let's start with Bruce Flatt letter to shareholders. In this letter, he mentioned a few important facts. First, he believes we will see a recovery in financial markets later this year or in 2024. These are his words. While a recession is likely taking place in many parts of the world, we are now investing our resources with an eye on a recovery later this year or in 2024. Alternative investments have shown their incredible resilience during this period and are benefiting from a higher level of inflation than we have seen for decades. The combination of approximately 125 billion of capital available for investments, our perpetual funding structures, and our global business presence, and our emphasis on value investments positions us well for this environment. Second, he believes the shares of Brookfield are trading at a massive discount today, and he promised to repurchase the shares of Brookfield to create value for shareholders. And even he considers a tender offer, meaning a public takeover bid, if the discounts persist. These are his words. With our asset manager now trading separately and set on its own path, Brookfield Corporation is focused on allocating and deploying its capital to maximize the value of our balance sheet. With a net asset value per share, which we estimate to be vastly higher than the current share price, we expect to continue to use our cash resources to repurchase shares in the market. If the discount persists, we also consider other options, including a tender offer. At the same time, we continue to look at new areas for investment that will earn us an excellent returns and strategically position Brookfield for the future. With markets trading off and capital scarce, the odds favor us in finding something interesting. Next, he continues to argue that the changes we see in investment world actually benefits Brookfield as a value investment firm. The shifts from growth to value investments, the shift from technology only to rounded investments, and the shift from financial engineering and zombie operations to cash flow generation and operation excellence will all benefit Brookfield Corporation in future, which I 100% agree with him. Finally, he believes that the corporation is positioned to grow and widen its reach. He mentioned that they have 175 billion discretionary capital ready to deploy in buying back shares or reinvest in their businesses or buying new undervalued assets. He expects to see 25% plus growth in distributable earnings in each segment of Brookfield businesses and 15% plus of annual return to shareholders in the future. Overall, I really liked reading Bruce Flatt letter to shareholders here, and it was reassuring to see his vision towards markets and towards value creation for shareholders. I trust him and believe he's one of the best CEOs in the world. Now, after reading this letter, let's focus on annual financial results of Brookfield Corporation. Their operating funds from operation or operating FFO was up 23% this year to $4.6 billion. Their distributable earnings increased by 24% year over year to $5.2 billion, and their distributable earnings per share also increased from $2.18 per share to $2.68 per share, which is amazing. These growth numbers are not a joke, it's really strong. President of Brookfield Corporation, Nick Goodman explained the growth in the Brookfield businesses in summary here. Financial results were very strong for the year. We generated 5.2 billion of distributable earnings and 5.2 billion of net income. Our results were driven by growth in our asset management franchise, the continued ramp up in the earnings from our insurance solutions, and the resilience of our inflation-protected and highly cash-generating global portfolio of real assets. We ended up the year with approximately 125 billion of deployable capital as we look for new investment opportunities and enhance returns and further diversify our business. They also announced the quarterly dividend of 7 cents per share for Brookfield Corporation and 32 cents per share for Brookfield Asset Management, which were in line with our expectations. They increased their total dividend by 7% this year. If we look at the details of each segment of their business, we can see that asset managements bring in the largest operating FFO, followed by the private equity segment and real estate business. Asset management, renewable power, infrastructure, and private equity segments were able to grow their operating FFO year over year, while real estate and corporation showed a decline in FFO for this year. What is more important than numbers is the growth rate in different segments of their business. While asset management bring in the most FFO, it seems their private equity is growing much faster than other segments of their business by almost 45% year over year. If we look at their distributable earnings, we can also see that their insurance business is taking off like crazy with an explosive growth in their earnings. Distributable earnings in insurance business is basically more than 10x in the last year, which is awesome for the future of Brookfield. Overall, I'm extremely happy with Brookfield earnings report and Bruce Flatt letter to shareholders, and will continue to hold my shares in Brookfield for now. There you are, guys. I hope you enjoyed this video. If you enjoyed this video and my coverage of earnings report of Canadian companies, consider subscribing to the channel to see similar videos in future. I will wait for my other Canadian companies earnings report to hopefully cover those as well. But until that time, I see you guys in the next video. Farewell.